Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, see what's going on Twitter. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, sectors, looking for investment opportunities, and I share those opportunities with everybody in the community. I let people know how I come about finding the companies, why I like them. It is a large dose of technical analysis, a little bit of fundamental analysis thrown in there, and the sector looking pretty dang good. If you're interested in figuring out what companies I own and what I'm doing for the commodity bull market that we're in, definitely sign up. Special is the coupon code. You get a $25 discount on the first month only on the monthly membership and a $100 discount on the yearly membership. And you can always swap from the monthly to a yearly if you'd like to do that using special as the coupon code. So Dow gold equals 1. Silver is breaking out against the consumer price index. Why is that important? Why should we care? I mean, some of these people, they'll say, what has that got to do with anything? What has that got to do with this ratio? Well, it means a lot of things. I mean, that's basically saying that you don't understand the markets for some of these things. That's what it kind of means. What this means is that the mining companies, if they can outpace, if silver can outpace the consumer price index, just to give you a general kind of, overarching statement, is that the mining companies could drastically outperform here as silver outperforms inflation. And I understand that the consumer price index is a crappy number. It's all just manipulated BS. I get it. And I agree. A lot of it is manipulated. They do substitutions, hedonic adjustments. I mean, basically, they can do whatever they want to have that number say whatever they want. Oh, this product is 30% better. Let's discount it by 30%. It's just a made up number for the most part. But it is breaking out. Some people watch this. Some investors look at this, and then they make decisions based off this. So silver outperforming the consumer price index. I would be looking at the silver mining companies specifically. Here's North Star. So this is gold's 7.5-year rate of change indicator. Gold just rose 100%, and we are barely getting warmed up. A massive 10 years ahead. It should double again and then double again after that, in his opinion. This is the capital rotation events that he has coined. We've got a nice base that we put in the 2010s, and now we are breaking out of the base and also out of this downtrend line for rate of change, 7.5-year rate of change. Why does it matter? What this means is that gold could speed up. Its rate of change could go at a faster and faster pace. It doesn't mean that we go straight up. There could be pullbacks along the way. Most likely there will be. But we are going from one environment or paradigm into another environment or market condition. It's a different market condition and environment. This was a commodity bull market. This is a commodity bull market. And then this is a commodity bull market. Now we are breaking out of a squeeze here in the corner. This squeeze could end up with some crazy stuff going on the back end. So this isn't just a bull market. This is a bull market with a breakout, like a squeeze in momentum. So it's not like the 2000 to 2011. This could dwarf that. This could be very similar to the 1970s. And if you were to look at this, if you draw a line through here at the bottom and put that as a triangle, the size of the opening is your projected move upward. So we're probably going to go all the way up here, much like 1980-ish, 79.80 back there. I was getting into some ratios here. I put palladium ratios here. So this is palladium versus gold. You can see the cycle, big cycle going up, big cycle coming back down. We had a nice good bottom in 2009 for palladium. Then we are cycled back up, peaked in 2020, 2022, and we've cycled back down for a potential low coming up over the years. Do I think that palladium is exactly right? I mean, it doesn't look bad, but a lot of the times you can see that we've been down here and it grinds down here for a little while. So that is a possibility that we do some grinding on the ratio. It doesn't mean it can't go up in nominal price. I just don't know how much faster palladium is going to outperform gold. That's the only question I have. I don't know because historically it's grinded. So it grinds sideways for, some years down here before cycling back up. This is palladium versus silver, and we've come down from incredibly low levels for silver. Silver was an absolute bottom in 2020. That's where I was buying the living poop out of. And we went all the way back down and cycled back down to where palladium is getting cheaper. It doesn't mean we've bottomed yet. What this means is that we are getting cheaper for palladium, and we could still dive down, very similar to 2008-9 here. We could easily do something like that in the future, and that would be the bottom in the ratio. Now, just because something bottoms in the ratio does not mean that palladium will go down in price. It just means the ratio. It means that palladium may not go up as much as silver for the short term over, let's say, the next year or 2 or 3. That would be my guess. And then we've got palladium versus platinum, and I swapped my metal. Luckily, I swapped it right kind of at the top there. April of 2020 is where I swapped it. I swapped my palladium for platinum, and I've been riding platinum lower, 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 lower. And I wish that we can go all the way back down here where platinum is expensive to palladium. What does that mean? What would that mean? So I'm going to give you my example. Okay, I'm going to give an example of 10 ounces of palladium. So back in 2005, I bought it, but 2009, I did buy ounces there too. Palladium was around, let's just call it $179. So 10 ounces times 179, I put $1,790 in this example for 10 ounces of palladium. I rode palladium all the way up, all the way through here. And I swapped it, let's just call it at 2.75. So 2.75, I had 10 ounces, and I get 2.75, and I have 20, let's just call it 28 ounces of platinum, right? So we have 28 ounces. Right now, 28 ounces at 1650 or so is $46,200. And I put what, 17 something in it, 1,700 something bucks. So that was a huge gain. Now, what I'm going to do is I'm going to ride it all the way back down, all the way back down. I hope that we get down here. Now, down there, this ratio was like a third. So 1 ounce of platinum could buy 3 ounces of palladium. So if I have 28 ounces, I think that's what it was. So it was 10, yeah, it's 28 ounces. And I swap it and I get 0.3 because that's roughly a third. It means I have 93 ounces of palladium down here. So I went from 10 to 93. That is a true, call it 9 times your metal holdings by using ratios. Now, that wasn't a quick turnaround. That was from 2009 to something like 2030 or something like that. So I'm not saying it's quick, but this is a way to reduce risk because this ratio doesn't care what the dollar price is, and it can go up and down. And a lot of these metals are, I would say, inflation protected, like gold and silver. And we can trade in these things where you can put large sums of money to do these ratios over time and make a bunch of dollars. So if it's 93 ounces, and let's say down here it's $5,000 an ounce times 5,000, you turned 1,700 something bucks into almost a half a million using ratios. And this is something that I do use. And I use it even in other investing too. The platinum ratios, just to show you platinum. So platinum's now the one that we're using. Platinum, palladium, we did look at that one in the reverse aspect, and that's been coming on up. I swapped it right there in the bottom. Lucky me. It was kind of luck to some degree. And it's been heading higher. I swapped it at about a 1-to-3 ratio, and now we're at 1.3. So I have a very good return in terms of my number of ounces gained in palladium. Here is gold versus platinum, and we are in the buy platinum zone. We are very cheap. And if you zoom in on the right-hand side, you can see that we've broken out of the first trend line, hit our head on resistance, broken out of the second little guy there, and we're trying to break out here. And I do think it will break out. A lot of people say, oh, no, you don't want platinum. That's not even a precious metal. Yeah, it is. Yeah, it is. Tell me how it's not. Tell me how it's not. It's going to break out. We're in the commodity bull market. It's gonna outperform during the commodity bull market. Um, in my opinion, it is a precious metal. They create coins out of it. America does. We've got the American uh, Eagle Platinum coin, and I think it will break out here. And then we've got platinum versus silver, and right now it is cheap in a falling wedge where platinum looks great even against silver. And that is starting, it broke out and doing a retest right now. So there is a possibility that silver goes up incredibly and platinum blows right by it, blows right by it. So that is a possibility. It doesn't mean it will 100% be that, but I think that could be a high likelihood given this setup here, where platinum could outperform silver. Fingers crossed. I own a bunch. And here's some more platinum. So platinum macro bull triggered when it broke out of his 15-year correction consolidation. It's going to be a wild ride, but will regain its historic ratio to gold. Yes, surpassing gold's value with potential to trade at 2 times gold price. Yes, $10,000 an ounce for platinum is what this person is saying. I don't think gold's stopping at $5,000 an ounce. I am not even sure that gold's stopping at $10,000 an ounce. I really don't know, but I do think that 20,000 is possible. Now, the question then becomes, in Weimar, Germany, during that time frame, platinum traded at 5.5 times the price of gold during that highly inflationary environment. 5.5 times. Now, I don't know if that's going to repeat, but let's just go for it. Screw it, right? What if platinum goes to that historical high ratio back in the early 1900s of just say 5, and gold goes to $20,000 an ounce? So that means that platinum, using ratio analysis, could be 100 grand. Is that possible? It's possible, and I don't know if it will get there. We'll have to wait and see. But I want exposure to possibilities, and I want that exposure at the cheapest time underneath the cost curve that I can get it, which I did. So things are looking very good for platinum. The platinum miners, I think, will do crazy stuff. Yeah, everything looks really good. Here's another one from Grady. It says, been saying good times for silver miners are coming. They have now been moving hugely. Posted this chart 18 months ago in linked post saying it was time to buy the large silver miners. It was. A new phase in silver miners has started, and we have not seen anything yet. We've got the probable end around the blue end around apex move coming. It's now happening. So here we are. We are breaking out of SILJ versus SLV. We've got a nice little inverse shoulder head shoulder. We've got a slingshot move around the bottom arc. Everything looks really good. So what am I going to do? I'm not going to do anything. I already purchased. I'm already in big. I'm in big and I'm just riding it. I'm just going to sit. I'm going to do nothing. I'm going to just relax and let it go. That's what I'm going to do. Tavi says the gap between commodities and inflation expectations has never been this wide. If you ask me which one likely drives the other, I would unequivocally side with the yellow line, my real-world inflation gauge, since most goods worldwide are ultimately driven by commodity cost dynamics. Let us not forget that the financial repression policies Trump and the Fed appear destined to pursue will, in his view, only intensify inflationary pressures. So commodities versus inflation expectations. The US break-even 10-year, which they have said they're going to try to hold this down. Now, this is where things get a little bit funky. I'm going to share my opinions here. I think commodities are going to rip. I think they're going to try to hold the 10-year down. In order for them to hold the 10-year down, they need to whack oil. Here's the problem. I don't think they're going to be able to hold it down. And I don't know if they're going to be able to hold the interest rate down. Inflation's going to come. Commodities are going to go. Oil's going to go with it. It's an inflation-sensitive, an inflation-sensitive commodity. And I think we're seeing the equities be incredibly strong, but the oil price itself be a little bit weak. I think there's a disconnect. So I think the break-even 10-year here, they're trying to hold this down right now. And they're trying to hit oil. They're trying to hit this and try to keep it all down. You know what that's going to cause? It's going to cause a big slingshot move to the upside, in my opinion, for oil and inflation and probably interest rates at some point. Here's crude oil. So we got people, they're all jumping on it. Price target 57.40. Yeah, we could dive down. We could go down there. I'm not saying we can't. But I think that's going to be a slingshot move in the opposite direction at some point. Porter says the Chapwood Index tracks the real-world price fluctuations of 150 consumer items in the 50 largest U.S. cities. Unlike the government's CPI, the Chapwood Index avoids hedonic adjustments and substitution biases. It's a real index, not propaganda. As an example, the CPI rose 3.5% in 2023. But in Boston, the Chapwood Index shows the real cost of living increase was 13.6%. 13.6% is what our inflation rate really is. And that's probably year over year over year. So here's the thing, guys. Think about this. Tell me how the S&P 500 performs when you've got an inflation that's above 10%. If it's not returning more than 10% after taxes, you are losing purchasing power. And I think that's what they're doing. I think they're jacking the inflation way up. They're lying about it through the consumer price index. And these guys who track it using real stuff, yeah, your inflation is probably 13, 14, 15% per year. And a lot of people will be like, no, that's not right. Oh, yeah, it is. Yeah, it is. Market Sniper, it says a meaningless indicator can remain there or above for a lengthy period. XAU can remain climbing at a slower rate, and RSI, the relative strength indicator, can ease down. There is no use here for the relative strength indicator at all for decision making. We are not near the 1980 peak. Totally agree. Gold monthly RSI now above 90. Last such reading was in 1980. We got a lot of people doing this. I don't know why. Some people say, do you use any indicators like MACD, RSI? I do not use any of them. It is a waste of time. They don't tell you anything. When you want to buy something, you're not going to be looking at necessarily the relative strength indicator. I look at patterns, charts, and valuations. That's it. I want a clean chart. MACD, I've used it before when I was newer. I think it gives a lot of false signals, and I don't think it's worth absolutely anything. The thing that you want to focus on, in my opinion, is the market condition and the cycle. If you can figure out where you're at in terms of cycles, that is far more valuable than any of these technical indicators. The technical indicators should be thrown in the garbage for a lot of this stuff. What you want to use is you want to use big long-term patterns, and then you want to match a cycle to the pattern, is what I'll say. LNG demand for ships set to at least double by 2030 globally. That's pretty big. Putin says prices will skyrocket, but energy demand will be met regardless. So Putin is saying that energy prices are going to skyrocket. I think he's right. I think he's right. That's what I think. And that's how I'm betting too. And that's all I've got for today. So that's where we're going to end it. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Special with the coupon code. And that's all I've got. So we'll catch you next time, guys. See you later.